Hey everyone, I hope you all are doing really well. Just quickly, we'll go through these couple of questions from the CMA part 1. So, what you need to do is right now just pause this video and try out these two answers, and then you can resume the video. All right. So, I hope you have tried these two questions. Now, let me just answer it quick. Now, the statement of shareholders' equity shows a reconciliation of the beginning and ending of balances in shareholders' equity. Okay, this can be the answer because that's what the shareholders' equity shows. Listing of all shareholders' equity accounts and the corresponding dollars. No, this is not shown. Computation of the number of shares outstanding using the earnings per share calculations. No, that's also not showed in the equity statement. Then reconciliation of the beginning and ending balances in the retained earnings account. So it's not just the retained earnings account. Retained earnings will be part of the shareholders' equity. So the answer is A. Next one. When using the statement of cash flows to evaluate a company's continuous solvency, the most important factor to consider is the cash balance at the end of the period. No, this goes with the cash, so it cannot be. So we are talking about the solvency here. Solvency here is nothing but how much you can rely on your own sales rather than getting money from outside. So operating activities, it can be. Investing activities, no, it cannot be because it is more of how much you're purchasing and selling off your holdings like that. And solvency is funding and issuing shares, so that also cannot be. So from operating activities, that would be your answer. I hope this video is helpful. Make sure that you share this video with your CMA friends, and I'll be doing more videos like these. So make sure that you subscribe to our channel. All right.